Inspired by Naval, he says that for a creative mind or to work like a lion, I think you need to be free in terms of your calendar. Let that exploration happen. And by saying no, you allow yourself or you give your time enough value that you can explore other things as well. So private paid small boutique communities are the future. I think you will see a lot of these coming up because social media, of course, everybody puts out the best version of themselves, but you have a place where you can be vulnerable in private, in a small setting. I think those are the key where people will really find value. And most journeys are lonely or get lonely. And people, as they become old and mature, they start realizing that many of their relationships or their address book, they don't have any depth. I would say if somebody is able to do 5 hours of solid work in a day, forget the coffee breaks, forget everything. 5 hours also is extremely high in my opinion, in most cases. 5 hours of solid work in a day, you're pretty much done. And then you have the time to yourself.
5 hours of work, $1 billion network, zero tolerance for small talk. Meet Utsav Somani, a second time guest on the 1% project, a keyboard warrior who cold emailed Naval Ravikant to kickstart AngelList India, invested in over 180 startups, and now is the founder of Offline, the most exclusive founder community network in India. A community that has co founders of Zomato, Country Delight, Ultrahuman, Noise, CoinDCX, and many more. His secret? Saying no to almost everything. His superpower? Being an introvert in a world obsessed with networking. His latest venture? Offline, is a community of the most successful founders navigating the loneliness at the top. In this episode, why warm intros are overrated, how sometimes looking stupid turns into a competitive advantage, and what happens when you lock India's smartest founders in a room for 3 hours every month. This is about building monopolies, not just companies. Depth over width, quality over quantity. Welcome to the conversation. How would you define yourself? Are you an introvert, extrovert, or an ambivert?
Depends on the situation, to be honest. And that's a nice question. So I think about this often. I mean, I used to refuse any public speaking activity before because when I'm put in front of a large audience in person, I think I'm an introvert. I hate public speaking. But when you put me behind a laptop, I'm pretty comfortable closing sales, doing new founder chats, investment chats, all of the above behind the laptop screen. So depends on the situation, but I would mostly classify myself as a keyboard warrior, happy behind a laptop, doing all of these chats, including chatting with you over this podcast. But if you were to put me in a large room and give me 10 slides to present in front of like a very large audience, I think I'm fail. So introvert is where I would fit my personality type.
And how has that actually helped you?
How has that helped me? I think brevity. I think we covered this on our last podcast as well. I don't try to do small talk. If it's a 30-minute Zoom call, I try to get into the meat of the situation. Most of the relationships that you'll make in your life are transactional. And so let's just get into it. I don't want to ask about the weather or discuss like things with you. Otherwise, if they're not, I mean, if that relationship is not going to have depth in the future, I'm okay for it to have just the transactional element of it. So no call for me is longer than 30 minutes. I don't try to like beat around the bush in my emails as well. So let's just get into the meat of it and just focus on what's most important for that particular call or email. So I think that introverted nature has helped me in just keeping it smooth and brief.
But how do you balance every opportunity that you say no to? It could have been the next best thing that you just said no to. So, how do you balance it out?
Pretty inspired by Naval. He says that for a creative mind or to work like a lion, I think you need to be free in terms of your calendar. Let that exploration happen. And by saying no, you allow yourself or you give your time enough value that you can explore other things as well. So over time, like you refined your internal search engine or your gut mechanism and gut thinking to the point where you know that if you want to get on the call with a particular person or with a particular founder or a particular partner, then there is something going right in the sense that you want to get something out of it or you want to give something out of it. If it doesn't make you happy, then it is okay to say no. I find my way of saying no also by a couple of steps. People used to say that saying no is also very rude. So I don't want to come across as rude as well. I mean, I've got on this phrase where it says, whenever I want to refuse a particular intro opportunity that somebody sends, somebody known sends to me, I just say that, can I politely decline this opportunity? Then that person you're asking for permission to decline that opportunity. And there is unlikely that person will say that, please take this opportunity or the call.
Have you ever gone back and reviewed any of your no's or thought about after a few years, now that you have been practicing this for some time?
I think there are always regrets. I refused a couple of intro opportunities early on to interesting founders, and they have gone on to become very large companies. But I think it's okay to have some regrets. I think it only makes you better, to be honest. But overall, I think the filter mechanism that I use to saying no has been quite refined now. There have been no recent regrets, but of course, early on, when you get into the habit of saying no and start valuing your time, you might miss out on a couple of things.
You've also mastered the art of cold outreach, obviously reaching out to Naval, and the list is long. And you've built your startup investing career on cold outreaches. But you do also have a view on how cold outreach is better than a warm outreach. So, can you double click on that?
So warm outreach, I think, comes with a little bit of a bias. The person sending you that warm outreach request will, of course, sprinkle the request with a couple of their own words, and you might have a certain relationship with that person sending in that warm intro. So your opinion is already colored. And in a day and age, I've reached out to some of the most powerful people via cold outreach. So I didn't have to look for warm intros to them because their information and contact information, everything is pretty much publicly available. Most people have their Twitter DMs open, their email addresses are easily visible on tools like Apollo or Zoom Info and stuff. So if you can craft a crisp email and there is something of value that you want to offer to them and they see value in that, put yourself in their position. And if you see that you can offer value to them, investment opportunity or a particular connect request or helping with a new customer or anything under the sun. These people are busy, but if you send in a quick email which is properly crafted, I think they will most likely respond. Of course, you might have to try a couple of different things, but don't spam them also. There's email overload for everyone. There's a ton of possibilities for everyone to connect with and opportunities. So I think just focus on keeping your outreach very, very crisp. If it doesn't work, of course, the warm intro route is also available, but explore different ways to reach out. I think more creative you are, the person will respect you even more.
You have been investing for a decade now. I think your first investment, startup investment, was in 2014. And then obviously after that, you built AngelList India. How do you reflect on this journey? And you built a number of early stage investing products for India, like AngelList, Galaxy, and multiple others. What worked and what didn't?
So AngelList India, I mean, why did I reach out to Naval to bring AngelList to India? I identified a bunch of key problems. So when I started investing in 2014, I was doing investments from a very small set of savings at my end. And I realized as I got more involved in the industry and consulted with few other platforms in the industry, that there were nobody was solving problems at scale for founders in India. And when I came across Naval Ravikant on a podcast that he did, I went down the rabbit hole of discovering AngelList and how they created these products for investors and founders. I realized that they solve for the triangle of angel investing. The angel investors who want access to the best opportunities to maximize their financial returns. The startup founders who are dealing with messy cap tables because paperwork in India is a nightmare. Getting wet signatures from like 50 angel investors, you'll end up spending a couple of months and delay your closing. And then people who have access to the best opportunities are unable to monetize their access and judgment. Either you become a full-time VC or you do this as a part-time side hobby. There was no middle ground. With AngelList India, we try to solve for all of this, where syndicates allow these pop-up structures to be created on the fly. So you might do one investment 1 year, 10 in the next year, and people can latch onto your access and judgment, and of course pay you a success fees known as carry or performance fees to deliver a successful outcome. Founders get so much knowledge density on their cap table via a single check format. So Angel is solved for all of that. So 2014 was start of angel investing. 2016, I got hired by AngelList to lead their India business. 2018, we launched. We've invested in over 1,000 companies in India now. I personally have done 180 investments using the AngelList infrastructure. Many of these products, of course, have improved the angel investing ecosystem in India. And Galaxy, of course, was a new twist that we did. So anything that we do or I do, I mean, I found my zone of interest or competence to be angel investing in startups. Every waking moment, at least on the inspired days, I try to think of how to double up on that journey in the sense that I want to have a non-linear path to like doing good for the ecosystem and also generating financial returns for my investors as well. So Galaxy was our take on the Scout Move program, where we give you $1 million using the AngelList infrastructure. So your name goes on the cap table. There's no cherry picking. You get to learn angel investing. You don't have to put any of your capital in that fund. So you're basically putting your name and reputation behind the line, but you're getting access to the best minds of angel investing globally. People in the US who built companies, scaled companies, and exited companies, and now are doing successful investing to come and coach you about angel investing. Founders love it. We've selected 12 people. They're investing for us as well. So reflecting back on all of this, I think the last decade, it started with angel investing startups and founders. And I think it scaled up really well, beautifully to what I'm doing now as well offline, which is basically building a private members community for the scaled up tech founders of India.
Most of the times we get to talk about what all worked, and this has now been a decade for you. What do you think didn't work?
Ah, nice. So a lot of things. If everything was going fine, I think we're not doing enough. I think so. A couple of things which didn't work well. I think the regulations in India are pretty tricky, and over the last few years, they've become increasingly strict. So our boundary for experimentation in the country has been slightly restricted, unlike, say, the US market or other markets where, say, Dubai or Singapore, which are way more forward in like sort of providing a sandbox to do these new experiments and allow new products to come in. So we've been fairly restricted because India, given that the size of scale of our population and our user base, we have to be investor protection first. There's lots of mis-selling going on in the ecosystem about different offerings, different products, guaranteed returns, all of that kind of stuff, just to quickly allow people to invest, but without the repercussions to think about. So for us, I think we've been restricted in terms of regulations. I think although the regulator has taken a favorable stance in some spaces, but also a negative stance on some other spaces. So I think if there was more breathing space or wiggle space, I think AngelList India would have launched a lot more exciting products for the country. A couple of other things that didn't work. I think one thing that I think about is that we should have done more in content. We experimented with our podcast as well. I think English India, especially our GPs and LPs and our founders, have so much knowledge to offer. And there are other platforms that have done this well. There are podcasts such as yours, or say people who run like these large format podcasts. And given that our depth in the ecosystem and our depth of our connectivities and networks, I think English India could have done more in the content space. And given that we were very early to other products as well, we should have done a lot more in terms of educating people around these products as well and about generally the asset class.
You talked about building an offline community. You now stepped off the gas from AngelList India and now building something very exciting. The reason I reached out to you the second time is because I saw that on LinkedIn. I was like, we definitely need to talk about this. So tell us about offline.
So offline, the simple definition is it's a private members community for the top 10% tech founders of India. So why do I say top 10%? Because the scaled up founders, once they've scaled up beyond a certain point, they have different set of challenges and problem statements to discuss. And none of this is being discussed out in the public. Just the fear of judgment or, I mean, repercussions to their own companies is pretty real. So what we created at Offline is an executive coach led peer group format meetings, which happen every month, where we pair up founders in 6 to 8 member groups across different cities. And they come and meet every month for 3 hours. A trained facilitator is there. 80% of the time, the members are discussing what went right, what didn't go right in the last month. So think of this as professional group therapy for these founders where it's lonely at the top. That saying is pretty famous. So it truly is. Like some of the founders, I mean, after the first couple of sessions, they said that this is magical. Like I've never had a place like this to come and discuss what went right, what didn't go right. These can be serious topics like co-founder issues, investor issues, or what's not working in your marketing strategy, or just things overall. If you're running $1 billion companies, there are fires to fight pretty much every day. So how can you zoom out and look at things from a third person point of view and from other founders who've been there, done that, might have a possible solution to that problem as well that you have. So we created these groups to have this professional group therapy format where you come and talk about all of these issues, the highs and lows of the month, and also have a particular theme around these topics. Better energy management. What is sucking out energy? What is giving you energy? So topics like these, very simple topics, but unless you put pen to paper and discuss this and share the learnings and hear the learnings of other founders, you're probably not going to, you can read all of this in a book. But unless there is somebody navigating these conversations with you, unlikely that you'll get anything meaningful done at just at a solo level. So we did that. And then also the startup events in the country have lost their sheet. The best founders don't want to come out. It's usually 150 people, a VC hosting a mixer, cheerleading their entire portfolio of all different scales and sizes. Right? Many people have raised a smaller seed round, so they're still figuring it out. But there are people who've scaled up and you want a more private setting for learning and sharing your experience with other founders and their family members. So we thought that let's build all of this together at offline. And once you've assembled 300 of the best founders in the country, then we go from community to services to product. Most community products for businesses actually fail within the first year. Like, I mean, most people, when you think about a community offering, what they say is that it's just a WhatsApp group, 250 people just on a WhatsApp group, and everyone's sharing like random links. And the engagement levels you can see or ask anyone will drop off. So we're building this piece by piece. Every single event, every single member, I want to know when is their IPO coming up, when is their fundraising happening, what is not going right, when is their birthdays, when are we having a kid, all of these finer details about our members just so that they feel personal and engaged. I don't want to say that offline is a family, but it is truly a deeply engaged community. We're not focused on width. I don't want 200 members coming in the first year. This will break. We want 100, 150 of the best members over the next 2 years with focus on depth. We're not focused on width. Let's do depth first.
How did you come up with the idea?
I love founders. At AngelList India, we've done the more retail end of spectrum where people are raising their first round, investing in their first round. So I thought let's focus on the other end of the spectrum where people have really built scaled up companies. What can we solve for them? I think the need to belong or a platform to have for their inner voice was real. So I said, let's build this out. But what will bring people together? It's not fancy events. Those are bells and whistles. If they're really connected with each other and opened up and have that shared vulnerability going for them in a particular community format, I think that really works. I've been inspired by different communities that have started up. So Hampton does this well for startup founders in the US. They were a good inspiration as well. Then we've got YPO and EO, which have existed for a very long time. I think 5-decade-old organizations run as nonprofits. They're focused on more business families because they ask for certain restrictions and requirements when you're getting in, including a check off your balance sheet and revenue turnover, number of employees, and all of those things. So a tech founder doesn't belong them because the entry fees for YPO and EO in certain chapters is pretty prohibitive. And the peer group that you get is also mostly second, third gen. So the problem statements of talk about performance marketing, return on ad spend, all of those other things when you're building a tech company are very different. So we identified a clear white space, which is YPO for tech founder. That's one way to bucket us. But we'll do a lot more. Members seem to enjoy this core product where they get together every month. They make space on their busy calendar for 3 hours to come and discuss what's working, what's not working, share the learnings, take learnings, and come back with a lot to introspect on.
Where do you find the Bill Campbells for the Indian ecosystem? So, what I mean, the coaches you mentioned, because these are coach led discussions. So, how do you identify them? Who are these individuals? What are their backgrounds?
Before I got into this, the person in the room has to be so smart at reading the room and what you said, Bill Campbell level. So we tied up with Matt Mukari's team. Matt Mukari is the executive coach for Naval Ravikant, the Airbnb CEO, Coinbase CEO, all of these people in the US. And we asked him to design, his team designed a playbook for the Indian market. So our playbook is pretty much defined on what each session unpacks for a particular group. So all of these learnings are specifically geared up for the tech community. So we have the playbook. We took help from Georgia, who works with Matt Mukari. Matt Mukari, the Mukari method is pretty famous for founders in the US. He's put out all of the content online as well. And so we designed the playbook. Then I went ahead and found 7 of the best executive coaches in the country and asked them to help us with this project. Most of these people are executive coaches already or leadership coaches for Fortune 500 founders, for promoters of these companies. They typically have ex-McKinsey backgrounds so that they have the understanding of different industries as well. So a good mix of consulting slash leadership coaching slash human psychology as well, because you got to read people in the room. Like they might be saying something else, but what they really mean is entirely different. You don't know what they want to say before you really dive deeper into it with them, and especially in a group format. So reading, ensuring good participation from everyone, I think those are the key skills that we look for. So consulting and a mix of leadership coaching, people who've done this for at least 5 to 10 years.
Let me ask you a novel question. Do you think that offline is a non-linear product?
I think in its current format, it's a very linear product. There are some weeks where we feel, oh shit, this is not working. There is nobody interested in this. And once you hear good feedback from the members who are already there, and these are founders of like really late stage companies like Shiprocket, Ultrahuman, Noise, Zomato, all the late stage CoinDCX, late stage companies, Bizongo, Country Delight. And when you hear the feedback that this was amazing, this is what they signed up for, that's when you realize that, oh man, you've got to get more people to experience this. And then the referrals start coming in. And I think in its current state, it's a very linear product. But once you assemble and gain the trust and loyalty of 300 of the best people in the country startup ecosystem, there is so much more you can do with their help. There are so many clear pain points that a founder has in their journey. And how can we build to solve that? That becomes the non-linear aspect of this. And we're still on that journey. Linear, but I mean, you never know what a Jacob looks like until you've experienced it.
Is this bootstrapped?
No, we've raised $2 million actually from some of the best founders in the country. Co-founders of Razorpay, Grow, CoinDCX, Ultrahuman, BharatPe, many of them have invested in this journey, including some early stage funds like Better Capital, DVC. We aim to run this profitably. This is a one and done round. It's a new form of doing venture capital. I wanted to get the best people on my cap table to get their advice, their time, their knowledge, and their connects on my cap table. And we've diluted a very small amount. I retain majority of this so that we built this out profitably. I've over the last decade in my startup investing journey, I've seen what works, what doesn't work. So I think that once you've done what offline is doing, once you've assembled the best people, the network effects are so strong that nobody else can come and replicate this. You can't have two offlines in the country. So it satisfies what Peter Thiel says, which should be a monopoly. It satisfied what I think a founder should look for, which is majority, just so that they can drive control on the board. And also having some early believers, just so that you have external validation, but also external checks and measures as well. You want the best people. I send out monthly investor updates, all of that other things, just so that I am in check as well.
Is this something that you think of building for the rest of your life? Is it your Mark Zuckerberg moment, building Facebook and Meta? Or is it your Peter Thiel or Elon Musk moment where you are building X number of products and services?
I have no idea. I don't want to compare myself to those greats, to be honest, but I think we're still exploring. In the early days, I think for us, I don't want to put myself or bucket this into a very categorized way. I mean, when people ask me what's the 3 year plan, I don't have a 3 year plan. I mean, it's 6 months at a time. I know what we want to get to in the next 6 months, which is more exciting members, more awesome founders, more positive feedback from everyone, and eventually get to a offering which is keeping 90% of our users happy. In a service business, you can't keep everyone happy. And then figure out the next 6 months plan. So it's 6 months at a time for me. So that's how far I'm thinking.
And how big is the team?
We're 6 people now, and we've got, of course, the brilliant facilitators working with us in different capacities.
How did you choose these 6 people? Have you worked with them? You knew them?
No, actually, to be honest, there were specific skill sets that I was looking for. So Jananda, she leads our operations. She was head of memberships at SoHo. So she brings extreme taste and culture and other things and person reading capability that I need when somebody is talking to our members, reviewing applications, and all of those things. Sana has experience in events. She used to head programming for Quorum. Quorum is a physical space that has done events really well. You're a membership community, but with a physical space. So she's done well. Sachi and Sahil are helping us on ops.
Believe it or not, the minute I saw offline, I messaged a friend of mine and saying, this looks a lot like Soho House, but maybe more. And there you go, you have hired the operations person from Soho House.
Soho House is inspirational. I mean, in the sense that they've built a cult brand. Of course, the stock market turns have not been that promising, but I think generally, I think they've really created a place where creative people come together. So I think private paid small boutique communities are the future. I think you will see a lot of these coming up because social media, of course, everybody puts out the best version of themselves, but you have a place where you can be vulnerable in private, in a small setting. I think those are the key where people will really find value. And most journeys are lonely or get lonely. And people, as they become old and mature, they start realizing that many of their relationships or their address book, they don't have any depth. So how can we build depth in your address book? That's something that we see private paid communities really doing well.
Let's talk about pricing. The community price presently is 5 lakhs a year, and there is also an acceptance fee. That is steep for a market like India, for actually any market to start with. So, what is the thinking behind that pricing, and why do you think that it's going to be a success?
I honestly don't think it's steep. If you ask some of our members, they say that it's just 5 lakhs. I mean, for what they're getting. So we do monthly feedback check-ins with some of our members randomly. And everyone said that this is underpricing your product. The training facilitators and the playbook that they get is just insane. We're not a business networking club. All these founders are scaled up founders. So 5 lakh rupees for them or their companies is not a really significant sum. Executive coaches in general are super expensive. They run into thousands of dollars every month. So you're getting the best of that, plus the community together in this single product together. So that is not, in my opinion, also. We did an extensive study on what people would be comfortable paying. It is not really high, on the higher side, to be honest. Like YPO and EO charge a lot more. Their acceptance fees ranges tens of thousands of dollars as well. So what we're giving is just super power packed value and the kind of like people that you surround yourself with. There will be business opportunities that come out of it. There will be some learnings that you come out of it. There will be serendipity, business deals that get happen and that happen, and it's already happened. So I think the value that we're giving, we're leaving some value on the table as well. But I want more and more awesome founders to come and experience this product. And eventually, after every 15 members, our membership acceptance fees increases as well. So to be honest, that network self-restricts itself beyond a certain point also for that matter. Because the network effects in this are so strong that once you are in the room with the smartest tech founders in the country, responding to you and helping you out, that value is just insane.
Why does it need to be offline?
I mean, there's so much happening online. I was like, let's go analog and bring things offline where real connections are built offline. On a Zoom, you're transacting, like in an office, you're transacting with people. But offline means that you just disconnect truly. And this is an entirely digitally connected world that we're living in, and especially more so for the community or the industry that we're in. Indian startup ecosystem, extremely vocal, active on Twitter, LinkedIn, doing their personal branding, all of that stuff. But where is that place where you can just literally disconnect and think about like other things apart from just work all the time? So that is where the name of.
I'm sure you observed the various meetings that happened in offline with the members. Has anything surprised you about those meetings and discussions?
Yeah, actually. So depends on the groups that we divide, the pod groups that we call them, the 6 to 8 member curated groups that we create. One very interesting learning came out of one where a member said that we don't want the executive coach in the room. I am happy to be that person who leads these pod groups for you, at least for my pod group. So we start learning more about how member-led sessions can happen and member-led events can happen. So that's something that we're trying to experiment maybe in the future. But most founders, I'd say, are introverted, like in the sense that you need to nudge them in the right direction for them to open up or think about a particular topic or have that aha moment. But we realize that some founders are extremely alpha in their thinking and just being forward. So we say that there might be a mix of some groups where there are more member-led sessions than say an executive coach-led session. Most people are happy with just the monthly check-in where they get the highs and lows discussion time, that open space with other 7 to 8 founders, bringing them together in a group format. So I think we're learning more about our members, but now I think we're at a place where 90% of the product is refined. The service is refined to the point where 90% of our member base is extremely happy with the offering. So a bunch of these aha moments keep happening. We learn more. Our members are all extremely smart people. They're building like, I mean, extremely high growth, fast growing tech companies and unique category defining companies. So we always learn something new. Every day or every week is something new.
You built AngelList, which obviously led to a lot of other angel networks within India. But on the other hand, offline you have built, you do consider that there can't be a second offline in a market like this just because of the network you're building and obviously the pricing and the chicness that needs to go into becoming a member. So how do you see this? Does everything have to have a 0 or 1 outcome?
Not really. I think angel investing is expanding the pie of the country, right? I mean, it's expanding the country's GDP in some form or other. I mean, more angel investors coming in mean more founder can take risks. So it is expanding the pie, right? It's not a zero sum game. Private paid communities for a specific vertical, I think, is definitely a zero sum game to some extent, in the sense that you can't have two communities with the best founders. The best founders will be in either of the community. And that is driven by network effects, the value that you're offering, the pricing, and so many other market factors. So at offline, I feel that we won't have a second offline. Like if somebody's doing a community where they might follow a different model, there are other communities where there are 2,000 members. So we're not that community. We want to keep it small, boutique, very focused, very mission driven. And I don't think there's a place for a second offline. The startup ecosystem is not that big yet. Eventually, it will be, but not yet.
Do you analyze your decision making, as in retrospectively look at all the decisions that you make?
Yes or no? I mean, I have this weekly check-in, check-out document. What do I want to get done this week? And what have I done? I mark in green or red for that week, and yellow is work in progress. So I analyze it to some extent. And there are the Jeff Bezos framework, reversible versus irreversible decision. Is it one-way door, two-way door? If it's a reversible decision, like making a particular intro or like changing something on the website, like then I'm quick about it. You're expected to have good judgment in both cases. And the reversible decision, you can be wrong more often than not. Don't try to be wrong. That's the part where judgment comes in. But in irreversible decisions, it's better to be more thoughtful about it. So, of course, I analyze them in different lenses. Like reversible, be quick, exercise judgment. Irreversible decision, do some thinking, sleep on it, and then exercise it.
In terms of your close family, friends, are there people whose decision or views about your ideas do impact you significantly?
I mean, my wife, of course, I want to present the best version of myself in front of her and my family. It, of course, you think about it, that voice on the back of your head. What will she say about this decision? What will my parents say? Like, we're in an Indian society where I think your decision making, upbringing, a lot of that is affected by parents. You stay with them for a long time as well. So all of those decisions play into your factor, your decision making factors. Will my parents be proud of this? Will my wife be proud of this? So it does affect it, but I think eventually you have to grow a thick skin as well. In short term, you have to be okay looking stupid. The decision to leave AngelList India, I know I wasn't right for the job. The person who's leading AngelList India was right for the job. It's 0 to 1 is done. 1 to 10 needs to be done by somebody with a different skill set. So stepping back, leaving the comfort of AngelList India and established brand was, of course, a decision that I had to look stupid for to even think about or create space to build offline. But now I think on how this is shaping up, eventually they'll realize that I think this was one of the better decisions I've made.
You come from a family business background. What was your parents' reaction about offline?
I mean, first about angel investing, I thought they said that I was getting into some gambling or some random scam. Because in 2014, startups were not that common now. Shark Tank and investing in all of that stuff is so commonplace that even my grandparents would speak about startups now. That's how startups have become commonplace now. But back in the day, 2014, Flipkart had just become a unicorn. Nobody was talking about these. Startups had to advertise on billboards just so that they would get their employees to join them because they could convince their parents, oh shit, this company is advertising on a billboard, so it must be a real company. That was the era back then. But now building Angels India, investing, seeing cash returns coming from the investing as well, which is a decently profitable activity, they realized that this is my zone of competence. You go do you, basically. So it took a while to convince them. I think it will, of course, be different and difficult or easy for many other people. For many people, convincing their own parents about doing a startup, leaving a comfortable job, which was the dream in the first place, to get a nice job at a big company, big tech company, to do a startup. It'll be different for everyone. But for me now, I think they know that I have a thinking head on my this thing. I spend a lot of time thinking about my every single decision. So I think now they're comfortable with what I gotta do. I should actually ask them at some point.
So you are in some ways very protective of your time, and the reason for that is that you want to have a lot of spare time for your own thinking, reading, absorbing, retrospecting. How do you chalk that time out? You have a family, you have a wife, you have parents, you have friends. How do you do that?
I think I mean, when you chalk up a day, I think 24 hours is a lot. 8 hours of sleep, 8 hours of work, and 8 hours of personal time. right? I mean, that's a lot of time. Like, I think to do different activities. Like, if you get 8 hours of sleep, some people get 6, some people get 9, but 8 hours of sleep is good. And 8 hours of solid work, I would say if somebody is able to do 5 hours of solid work in a day, forget the coffee breaks, forget everything. 5 hours also is extremely high, in my opinion, in most cases. 5 hours of solid work in a day, you're pretty much done. And then you have the time to yourself. Like, I mean, your free time can be reading books, I don't know, enjoying Netflix or running, going jogging, playing pickleball. There's so much time, I think, in the world, and plus weekends as well. So overall, I think I've managed time division well. I mean, I don't want to say work-life balance because offline for me, I live, breathe, eat offline and startups and founders. So for me, even taking a couple of calls or like doing some work on the weekends, it doesn't feel like work to me. I enjoy it. It gives me joy. I don't think about dividing time between like different buckets, but I think 8 hours, I think most people can get so much done in that. Like, if they really are thoughtful about every single minute of their time. And it's okay to waste time on some days. Like, it's okay to be like, you don't have to beat yourself up about being non-productive on one day. Everybody has off days, off weeks as well, off months. But what you learn from that, what you recharge yourself, how you recharge, rejuvenate, all of that matters as well.
And before we close, what does success mean to you?
Success is just living a happy, content life, to be honest. I don't want to be the richest founder in the country or the richest investor in the country. I don't have that ambition. That game is not for me. I think if I've impacted even the lives of the offline members in some way, my employees and my family around me in some positive way, I think that's a good metric of success for me. So I just try to be 1% better every day, as your podcast is.
That's a great place to close the conversation. Thanks for being on the show.
Thank you so much, Pritish. Have a nice one.
Hope you enjoyed the conversation with Utsav. I have 4 key takeaways. Number 1, Utsav has mastered the art of strategic rejection by saying no without burning bridges. His technique, can I politely decline this opportunity? A simple phrase that asks for permission to refuse, making it nearly impossible for someone to push back. He has redefined his filter mechanism over a decade, accepting that early regrets taught him to value his time above FOMO. Number 2, cold outreach is better than warm intros. This is counterintuitive to me as well. While most people chase warm introductions, Utsav deliberately chooses cold outreach. His reasoning is that warm intros come preloaded with bias and colored opinions. And in today's world, everyone's contact information is publicly available. So if you can craft crisp message that offers genuine value, even busy people will respond. The more creative your approach, the more respect you will earn. Number 3, depth over width. From clamping meetings at 30 minutes to building offline for just 300 members instead of thousands, Utsav obsesses over depth. And lastly, the reversible decision framework. Utsav uses Jeff Bezos's one-way versus two-way door framework religiously. Reversible versus irreversible decisions. A reversible decision is move fast, exercise judgment, be okay being wrong occasionally. A reversible decision, sleep on it, think deeply, then exercise judgment. This mental model helps him analyze his weekly wins and losses without getting paralyzed by overthinking or moving recklessly on critical choices. If you enjoyed this episode, subscribe to the show wherever you're listening to it and share it with someone who will find it valuable. For any comments and recommendations, you can drop me a line at pritish@1%.live. Until next time.